all of this, there are a bunch of result reactions that we're tracking. Texmaco Rail and Engineering is the first management on the show today. Reported a steady set of fourth quarter numbers. The revenues, came in around 17% higher year on year. We have Sudipta Mukherjee, who's the MD of Texmaco Rail and Engineering, joining in. Sudipta, the first 3 quarters of the year, you did a lot better. The last quarter, while the revenues grew, the percentage of growth actually slowed down. In light of this, what is it that you can guide for in FY26 when it comes to revenues and margins? Also, if you could give us a sense of what kind of order inflow are you targeting for the next financial year?
Good afternoon, Mangalam and Amraj. Thanks for having us. I think Texmaco has put up a very strong performance while our revenue has grown over 46% and the EBITDA was 58% higher year-on-year basis. And if you see the PBT, that's also 112% higher. So in a sector like railway, one should not look at things on a quarterly basis. It is on a year-on-year. If you see that we have significant growth, which we have put up as a company. And we foresee, of course, we are confident that we will continue with this momentum of growth. And while in the journey, we'll definitely improve few key ratios of the business significantly.
Okay. Could you just give us a sense in terms of the tenders from the Indian Railways in FY25? We do understand that it wasn't that much. We didn't see many large tenders. What is FY26 looking like?
Umraj, if you kindly analyze, if you kindly recognize the fact that Indian Railway first time came up with a long-term contract 2.5 years back. And it is in the history of the Indian Railway and the government of India's push for a long-term plan and a development for the country to become the third largest and second largest economy. So consequent to the National Rail Plan, the largest tender was awarded. So no one can expect that every year such kind of tender will come. And the delivery period of that tender was, of course, up to 2025-26. So everybody is sitting, at least Texmaco is sitting on a significant order book in spite of the fact that last year, whatever be the performance, and perhaps we are the highest supplier of rolling stocks to Indian Railway. And that is very much within the timeline of the mandate which we had as per the contract. And there has been few specific tenders in between, and which was more because, in this budget, government had a more focus on the removing the track congestions and add on the infrastructure part of it. So there were certain specific rolling stocks which started coming in. We have also got a share of that contract, and it's going on. And we envisage that very soon there will be further contracts which will be awarded or tenders will come up. So for the conventional rolling stocks are concerned. And just to briefly appraise you that Texmaco is very uniquely placed because of its very good joint ventures with global conglomerates. And we had been one of the pioneers in propagating for the technology and advanced products. And we are very happy to learn that government is looking forward for optimum solutions and more advanced railway wagon design, including the components and the bogies, and which as a company we are really looking forward to because we are very uniquely placed and robustly placed to get into that. Other than the infrastructure and all other things whichever we are doing, will be continue to focus on those signaling system solutions and many other parts.
What about execution for FY26 and the revenue that you're likely to recognize? Because FY25, like you pointed out, you did 46% growth in the revenue, 77% growth in the EBITDA, which implied a 200 basis points, near 200 basis points margin improvement. Do you think this 35 to 40% sort of revenue run rate is sustainable for FY26 and beyond as well? And what levers do you have for margins going forward? Do you think you can manage them between 9 to 10%, or there is a possibility that it sustains above 10%?
So, Mangalam, as I have mentioned that, of course, it cannot be, the growth will be sustainable for Texmaco. We believe if you recognize that what are the various parts of, various segment of business of Texmaco. One is the primarily the freight car division, which includes the component part of it. And we have this electrical part of the infrastructure. And then we have the rail infrastructure system and solution. So, so far what you have seen is the growth which is in the core business, which remained as a core business for the company in and around freight rolling stock. We feel that there is enough room for us to grow there because we are very technologically advanced and very uniquely poised so far the domestic market is concerned. And perhaps we are the only company in India who are significantly exporting the freight rolling stocks and its components. So we believe that there is enough room for growth in that segment. But what I can also assure you that we have a very focused approach to grow the electrical engineering part of it and the rail infra system and solution, which is going to get demerged from the company as a wholly owned subsidiary. And with government push on and huge financial allocation in rail infra and the signaling part of it, we feel with our kind of qualifications we have and with the focused approach and this management restructuring, that business has a huge potential to grow and it have a potential to be mirrored in a very near time.
Okay, all right. Just a quick last question then. You did tie up, you've entered into 2 partnerships in Q4, which is with a European firm and a leading US company as well. What will that bring to the table in terms of revenue for you?
So if you see that our revenue growth in terms of the numbers, if I have to mention of the turnover, it is around 8, it remained 8%. Of the revenue, but it has significantly growth in terms of the value. And we have been the one of the company who has all the accreditations to supply materials of freight rolling stock and castings to US market. And Trinity is one of the largest rolling stock manufacturer of the world. And Texmaco and Trinity is poised to set up the first of its kind global capability center in India. And you know that the whole world is thanks to the government of India's initiative and to all the Indians and all of us that everybody is looking at us as a potential supplier for the global requirements on a sustainable basis who are very uniquely placed in terms of cost advantage and of course, we are neutral. So more and more companies are coming towards us. So this initiative of putting up a global capability center in Delhi will also have a component called global supply sourcing. So that is an aggregation business for the rolling stock for the world. So one part will look for the innovation and technology upgradation and bringing new designs for India as well as the rest of the world where we want to fight with the global major today maybe, which is perhaps CRRC. And,
sure.
Then, of course, to fulfill the dream and work better out of India, being a global sourcing partner for the US market and rest of the world.
All right, we're going to leave it on that note. Thanks very much for joining in and speaking with us and giving us that perspective. So that's Texmaco Rail. The company has indicated that they have a healthy order book. The stock, as you can see, is up around 0.3%, and they will continue to focus on signaling solutions. They do have an export outlook as well. We'll take a short break, but up next, the management of Acme Solar Holdings will be joining in to talk about their Q4 performance. Stay tuned.